Hello everyone. In this video, I will try to show you how to solve accounting equation when a transaction has expenses account or income account involved. So this is the question that we have. Now before I start, I will try to identify the accounts which will get affected after every transaction. And I will write the names of the accounts next to the transaction so that after knowing all the accounts which will get affected, then we can exactly know how many assets account we have to open or liabilities account we need to open. I've done it already, so this is how it will appear. Number one, started business with cash. The two accounts that will get affected will be the cash account and capital account. Number two, purchase goods on credit. The two accounts that will get affected will be the stock account and creditors account. Number three, paid to creditors. The account which will get affected will be the cash account and the creditors account. Number four, received commission. The organization is receiving cash in the form of commission, so one will be cash account, the other one will be capital account, because commission is an income and we cannot show the income account in the accounting equation because accounting equation takes only assets account, liabilities account and capital account. So indirectly the income account we will adjust it with the capital, and income account will increase the capital account, and if it is an expense account it will decrease the capital account. So here commission is an income account, so we will increase the capital account, so the other account will be the capital account. Next we have number 5, paid salary. So the business is paying salary in the form of cash, so cash has been paid here, that means one will be cash account. On the other hand, salary is an expense account, so we cannot show it in our accounting equation directly, so indirectly we will adjust this with the capital account by decreasing the capital account. Number 6, outstanding salary. Outstanding salary means salary which is not paid but the service of the employees have been received. So any expense, if the word outstanding is attached to it, it becomes a liability for the organization. So outstanding salary is a liability for the business, so this account will get affected. On the other hand, for calculating the profit or loss of the year, the expense of that year, even if it is not paid, is taken into account for knowing the profit or loss of the business. So salary here, even if it is not paid, will be an expense for the year, so it will be an expense, so we will have to adjust this with the capital account. So the two accounts actually which will get affected here will be, one will be outstanding salaries account and the other one is the salaries account. So salary account cannot be shown, so we have to adjust this with the capital by decreasing the capital. Now after doing this, we can see that we have to open the cash account and the stock account for assets, and for the liabilities we have to open creditors account, outstanding salaries account and capital account. So let me show you each transaction in detail by explanation. Now the first transaction says started business with cash. Now the owner is bringing in cash for the business, and we have to see from, while recording it, we always have to see from the business point of view. So when we see this from the business point of view, we can see that the business is receiving cash. On the other hand, the business also has to record capital, because capital is the representation of the owner's account. So in this case, the business, when it records, it will increase the capital because the owner is bringing in 1 lakh rupees as capital. So if the business will record, it will record capital will increase by 1 lakh rupees. The capital account will increase by 1 lakh rupees because the owner has brought this 1 lakh rupees as capital. So the two accounts that will get affected will be, one will be cash account and the other one will be capital account. Cash is an asset account, so this asset will increase in the business in the form of cash, and the business will also increase capital because the owner brings 1 lakh rupees as capital. So capital will increase and cash account will increase by 1 lakh rupees. Now when we show this in our accounting equation, this is how it will appear. So first of all, you'll draw the format. After drawing the format, after filling up everything, in the first column you'll write 1, the serial number is 1 for the number of the transaction, then a brief statement of the transaction, that is commence business with cash. Now I will increase cash because the cash comes into the business, we increase cash. On the other hand, the business will also increase the capital because the owner brings 1 lakh rupees as capital. So the cash account will increase by 1 lakh and the capital also will increase by 1 lakh. Now we will see the new equation. The new equation gives us, we write new equation, then we increase cash by 1 lakh. Stock is not affected, so it is 0. Creditors is 0. Outstanding salary is 0, and capital we have increased by 1 lakh. Now if we total all the assets, we get as 1 lakh on the asset side, and if we add the liabilities and capital, that also will give us 1 lakh. So we can go for the next transaction because both the sides are equal and our sum is correct. Now if we see in the next transaction, it says purchase goods on credit. Now goods account in accounting equation is represented by stock account. On the other hand, the business has not paid cash for purchasing the goods. That means it has to pay this cash to the creditors. So the creditors will increase in the business. The creditors are liability for the business. So it is a liabilities account. So if we see the two accounts that will get affected will be stock account, which is an asset account, and the creditors account, which is a liability account. The goods are coming into the business, the stocks will increase, so asset will increase in the form of stock. On the other hand, the business did not pay the money for purchasing the goods, so the liability also will increase in the business in the form of creditors. So in this transaction, the effect will be the creditors will increase by 20,000 and the stock in the form of goods also will increase by 20,000. So if we show this in our accounting equation, this is how it will appear. We will write the serial number 2. If the transaction is purchase goods on credit, so we increase the goods are coming into the business and the business did not pay the money, so the creditors also will be increased by 20,000. It has to increase the creditors also by 20,000. So the new equation is, cash remains same as 1 lakh rupees. Stock has increased by 20,000. Creditors also has increased by 20,000. Outstanding salaries not affected, 0. Capital remains same as 1 lakh. If we add all the assets, we get 1 lakh 20,000. On the other hand, if we add the liabilities and capital, that also will come to 1 lakh 20,000. So we can go for the next transaction. The next transaction says paid to creditors. So from the business point of view, if we see, the business is paying cash to the creditors. So the two accounts that will get affected is cash account and creditors account. Now, if we see from the business point of view, we see that the business is paying cash. So the cash is decreasing. So the assets are decreasing in the form of cash by 10,000 rupees. On the other hand, the creditors have been paid. So the liabilities also will decrease by 10,000 rupees in the form of creditors. So in the effect of this transaction is cash will decrease by 10,000 rupees and the creditors also will decrease by 10,000 rupees. So if we show it in the accounting equation, this is how we have to show it. Number 3, paid to creditors. Cash decrease it by 10,000 because the business is paying 10,000 rupees to the creditors in the form of cash. Then we have to decrease the creditors by 10,000 rupees because the payment has been made to the creditors. So we are going to decrease, the business is going to decrease the creditors by 10,000. So the new equation will be cash was 1 lakh, it has decreased by 10,000, so the balance is 90,000. Stock is 20,000, remains unchanged. The creditors were 20,000, it has decreased by 10,000, so now the balance is 10,000 rupees. Then we have outstanding salary not affected, capital remains same as 1 lakh. Now if we add the total asset, it comes to 1 lakh 10,000. On the other hand, if we add the liabilities and capital, this also will give us 1 lakh 10,000. So we can go for the next transaction. The next transaction says received commission. Now the business is receiving cash, so one will be the cash account. On the other hand, the business is receiving commission. Now the other account should have been commission account, but the commission account we cannot show it in accounting equation because accounting equation shows only assets account, liabilities account and capital account. So if there is an income account involved, so in that case we will adjust the income account with the capital account. If it is an income account, it will indirectly increase the capital of the owner. So in that case, if it is an income account, we will always adjust it with the capital by increasing the capital account. So the capital account will increase by 1000 rupees. So whenever we see an income or an expense account, so that income or an expense account will be adjusted with the capital account. Income account will increase the capital account, and expenses account will decrease the capital account. So the two accounts that will be affected in this transaction will be cash account, because it is receiving cash, the business is receiving cash. On the other hand, the business is receiving income. Incomes will always increase the profit of the organization, and indirectly it will increase the capital of the owner. So indirectly we'll adjust the income account with the capital account by increasing the capital account. I will show you some examples of some expenses account and income account, so that you will be able to identify those accounts if you come across those. Accounts can be like, we have rent received, commission received, interest received on investments. If the organization has invested some money and it is receiving interest, then that is an income for the business. Dividend received, when the organization is investing in shares, then it receives dividend, that also is an income for the business. So this accounts will be adjusted with the capital. It cannot be shown in the accounting equation directly, so it will be indirectly adjusted with the capital. Whenever we talk about this accounts, it will be adjusted with the capital. If it is an income account, it will increase the capital. On the other hand, there are some expenses account, like for example salaries account, wages account, rent payment account, electricity bill payment account, commission payment account. When the organization takes any loan, it has to pay regular interest, that also is an expense account. So expenses account, we will decrease the capital, and incomes account, we will adjust the capital by increasing the capital account. So if we go to the transaction, we see received commission, cash we have to increase because the organization is receiving cash. On the other hand, commission is an income, so it will, the capital will increase by 1000. So if we place this in our accounting equation, we have serial number 4, received commission. Cash we increase by 1000 because it is receiving cash, and commission is an income, so the capital will increase by 1000 rupees. So the new equation we will have, new equation, cash was 90,000, it has increased by 1000, so it becomes 91,000. Stock remains unchanged, 20,000. Creditors remains unchanged, 10,000. Outstanding salary not affected, 0. And cash was capital was 1 lakh. It has the income has increased by 1000, so the balance is 1 lakh 1000. If we add both the side, we get if we add, it comes to 1 lakh 11,000. So if it is 1 lakh 11,000, if we see on the other side also, the total is 1 lakh 11,000. So both the sides are same, so we can go for the next transaction. Now paid salary. Now salary is an expense account, so we will have to open the capital account. The capital will decrease in this case. So because it is an expense account, we cannot show that directly, so we have to adjust with the capital. Expenses account will always decrease the capital, so here the capital will decrease by 1000 rupees. The business will decrease this from the capital, like actually it will be adjusted with the capital, and the capital will decrease by 1000 rupees. On the other hand, the cash payment was made, so the cash account will get affected. It is an asset account, the asset will decrease by 1000 rupees in the form of cash. So if we place this in our accounting equation, 5, paid salary, we will decrease the cash 1000 rupees. On the other hand, we will decrease the capital by 1000 because it is, salary is an expense. So the new equation is, cash was 91,000, it has decreased by 1000, so the balance is 90,000. Stock remains unchanged, 20,000. Creditors not changed, 10,000. Outstanding salary is not affected, so it is 0. Capital, before it was 1 lakh 1000, so it was an expense of 1000, so the balance comes to, after the deduction, 1 lakh rupees is the balance of capital. If we add both the side, the asset side and the liability side, we find This side will give us 1,10,000, and the liability side also will give us 1,10,000 rupees. So here we can go for the next transaction. Both the side are same. We have outstanding salary. Now, outstanding salary is the salary which is not paid to the workers after receiving their service, but this salary is will be taken as a salary for the current year also, because the expense was supposed to be in the current year. But even if the payment is made later also, but for the calculation of profit and loss, this salary will be taken into account even if it is not paid, for knowing the profit or loss of the business. So here we should understand that the two accounts that will come in this transaction will be, one will be outstanding salary, which is a liability account. On the other hand, the other one will be the salary account, which is an expense account. Even if it is not paid, but it will be considered as an expense for knowing the profit or loss of the current year. So we will adjust this with the capital. So the capital will decrease by 1,500. On the other hand, outstanding salary, normally salary is an expense account, but when we use the word outstanding, it becomes a liability. So outstanding means the salary which was not paid after receiving the service of the employees. So it is a liability because the business has to pay this in future, so it becomes a liability for the business. So it is an expense also for the current year, and it is a liability because the payment of the expense was not made. So the capital account will be decreased by 1,500, and the outstanding salary is a liability, it will increase in the business. So if we place this, it will come in this way. Number 6, outstanding salary. So we will increase the outstanding salary by 1,500. The liability increases by 1,500. On the other hand, it is an expense. Even if it is not paid, it is an expense for the year. So it is 1,500 rupees will be adjusted with the capital. It is an expense in the form of salary. So the capital will decrease by 1,500. So our new equation is, this will be our final equation. Cash balance remains same as 90,000. Stock same 20,000. Creditors 10,000. Then outstanding salary increases by 1,500. Capital, which was 1 lakh rupees, because it is an expense, salary is an expense for the year, so it will decrease by 1,500. So the balance of capital will be 9,500. So if we add all the assets and all the liabilities and capital, we get the assets total as 1,10,000 and the liabilities as 1,10,000. So I hope you have understood how we have solved the various accounts which are related with expenses. Now, if the accounts are expenses, we adjust in accounting equation, we adjust this expense with the capital, we decrease the capital. And if it is an income account, we adjust the income account with the capital account by increasing the capital account. Thank you.